So we've got 31% of the participants have attended the program this year. Awesome. Good to see you all. I hope some of you are people that have attended one of my classes. Matter of fact, Dwight Turner's on the line. I know he's attended one of my classes. Sorry if I'm missing some others out there. Let's see here. We've got about 10% attended a session in 2023. We've got some others who attended a session before 2023, and we've got some who have never attended. I hope that changes. Certainly today may have that opportunity. And then let me open up another polling question for you here. When was the last time that you actually listened to any earnings call? Whether it was your company, whether it was an investment you were thinking about making. When was the last time? I guess I need to open that poll up. That would help. When was the last time you listened to an earnings call? You know, a lot of times we listen to an earnings call. Most people admit that they multitask during an earnings call. A lot of times we listen from the perspective of what's in it for me, what's in it that's good for me, what's in it that's bad for me, and anything else we kind of tune out just a little bit. Let's see here. We don't have anybody that would rather go to the dentist. I guess that's a good thing. Let's see here. We've got a lot of people that have listened to earnings calls this year. We've got a few people that listened to earnings calls last year. Some say it's been a while since they've listened to an earnings call. That could be a long time. Let's see here. Okay, good. Thanks, Kathy. So she mentioned she's using her phone for audio. Seems to work better. So if you're having any challenges out there, let me encourage you to try that as well. Let's see here. Just a couple of others. We've got a few people that have never listened to an earnings call. Thanks for joining today. Your first earnings call. Congratulations. So let me close those polling questions here, and we're going to get started here. A couple of interesting statistics to start off with. 95% of employees don't understand their company's strategy. And 90% of employees don't understand their company's important business metrics. What better way to find those things out than listening to the company's earnings calls? By the way, only about 10% of employees actually listen to their company's earnings calls. So that's a challenge. And that's one of the reasons why employees have a tendency to get checked out, if you will, because they don't understand their company strategy. So it's hard to tie what they do back to the company business. We're going to get into Salesforce now. Just imagine you're the CEO, you're getting ready for an earnings call. Just a few interesting statistics about our CEO for Salesforce, Marc Benioff. He was actually offered and accepted an intern job at Apple while he was going to school. Famous employee from Apple, Guy Kawasaki. He got into a conversation with him one day, got offered the job and took it and stayed there for quite some time. He may be the only person to ever fire Larry Ellison, the founder and CEO for Oracle. He actually went to work for Oracle. He actually started Salesforce while he was working at Oracle. Larry, they got to be good friends. He was just a superstar employee at Oracle, and actually ended up taking a 6-month sabbatical. And that was when he came up with the idea for Salesforce. It was highly encouraged by Larry Ellison. Matter of fact, Larry contributed $2 million to the startup fund for Marc. And actually ended up on his board of directors. And then all of a sudden, guess what happened? Marc noticed or realized, came to the conclusion that Larry Ellison was actually starting his own CRM project. And so he asked him to step down. Larry said he wouldn't do it, said it'd make a lot more sense if he would fire him and get a lot more headlines by doing that. So he ended up, by the way, he got to keep his stock if he got fired, but they ended up parting ways, and Marc let him keep his stock anyway. Came up with the idea for Salesforce, co-founder of Salesforce in February of 1999. They've got over 150,000 customers worldwide and over 50,000 employees and a number of partners as well. So you're the CEO of a company, you're getting ready for your sales calls. Here's not your sales calls, your earnings calls. And here's some of the things CEOs have to think about. What do you need your employees to know, right? Um, this is a great time to let them know a lot of different things. What do you need your customers to know? With 150,000 customers, I bet you a lot of customers listen to their earnings calls and want to know how the company is doing. What do you need your shareholders to know? Your shareholders want to make sure things are going in the right direction. Should they keep holding on to your stock or not? They gave them at least one good reason to hold on to their stock in this last earnings call. I'll mention that. They gave them a lot of other reasons actually as well, but one in particular. What do you need your partners to know? Zach, Terry, they want to know what you need to know. Here's my guarantee for you. I make one promise in each one of my classes. My guarantee is slightly different, but if you listen to this call today, if you follow what we're talking about in terms of the tool and the process, it's going to help you build your credibility within your company. It's going to help you build your career as well. And it's also going to help you build your company, the company that you are with. This is good stuff. And that's why I was a customer first. And that's why I joined the company a little over 9 years ago. So we're going to use 3 basic steps to look at this earnings call today. We're going to prepare for it. We're going to analyze it, and then we're going to apply it. You know, when we think about an earnings call, really, if we just talked about all the different people that the CEO is talking to. And so we need to understand, we need to think through it. And it's really an opportunity for us to align with the executives doing the earnings call. And therefore, we should really have a to do or an action plan coming out of this earnings call. Don't just listen to it. We need to apply it as well. So first of all, we're gonna start off on prepare. And basically, there's 2 different parts of an earnings call. There's the prepared remarks. That's what the executives talk about on the call. Usually that takes about the first third of the earnings call, maybe third to half, something like that. And that is exactly what it sounds like. The executives prepare for this call. They don't go in there winging it. They use their prepared remarks. And I would suggest a lot of them are actually reading through those remarks. Now, I loved Marc Benioff as he was doing the call. He kind of went off script potentially a couple of times because of his excitement for what was going on in the company. So we've got the prepared remarks, and then we've got the question and answer session. So that's where the analysts get an opportunity to ask any questions that they may have of the executives. Now, it's interesting. It almost sounds like on these earnings calls that the executives and the analysts never talk to one another outside of these earnings calls, but they actually have some pretty good relationships with each other. And they do talk in between, but fresh information, so it gives them an opportunity to ask some questions as well. Now, things to do before the call. Number 1 is locate the call or the transcript. All right, so we got to know, how do we find the call? What are we going to be listening to? And so we can certainly do that. One of the easiest ways to do that, you all may have heard of this technology called Google before. Well, that's usually how I find my information. And I just do a search for, in this particular situation, Salesforce Investor Relations. So it doesn't necessarily take me to the main page of Salesforce, but rather to the Investor Relations page. And so when I click on that, here's what it looks like. And if I scroll down just a little bit, now I've taken some screenshots, obviously, of this, but when I scroll down just a little bit on that first page of Investor Relations, this is what it gives me. And you can see we could click on some of these things. The earnings presentation. So not only do they do their prepared remarks, they usually have a presentation to go along with it. Earnings press release. Lots of information in there. The webcast. So this is where we'd want to click on if we wanted to listen to the earnings call. A lot of times I'm busy, I'm working, I'm doing classes. I don't have time to listen to the earnings calls themselves, but I may go back and listen to the webcast or find the transcript and read through that. And I'll show you how I do that here in just a little bit. And then the quarterly filings. We have to file what's called a 10Q on a quarterly basis with the Securities and Exchange Commission. On an annual basis, we file what's called a 10K. Now, let me just get you all going just a little bit. Have any of you all ever read a 10K before? in the chat box. Anybody ever read a 10K before? A lot of no's coming in. That's almost like going to the dentist. James says, when I have to. Bruce says, yes, heard of it, but haven't read one. Well, let me tell you, I don't necessarily recommend reading a 10K from front to back. Unless you're having some sleep issues, that's a great way to put you to sleep. I'll read a couple of paragraphs there. But there is a ton of great information in a 10K. I usually find the 10K, I find the financial statements in there. What are my questions associated with that? And then I do a simple word or phrase search, and that helps me find a lot of information about my questions. Then I find a lot of other information that I'm curious about as well. So this is a great place to get us started right here. And then also there's another place called seekingalpha.com. Not all companies put their transcript on the earnings call. And so on the company website. So this is a great place to find it if you can't find it on there. So seekingalpha.com. And I just did a search for CRM, Salesforce. I actually just did it for Salesforce, and it gives us a lot of different information. Here's the transcripts, the SEC filings, what's happened with their stock over the last year or so. Tremendous information you can find there as well. All right, so we've located the call or the transcript. Usually it's the transcript for me. Every once in a while I get an opportunity to listen. Now we got to review our notes from past calls. Wait a minute, Kelvin, what are you talking about past calls? I haven't listened to any past calls, and even if I have, I didn't take any notes because I multitasked during that time frame. Well, we're going to get to those notes from past calls and how you might keep those notes here in just a second. And then finally, meet with your team. It's great to listen to an earnings call with others because that way you can kind of bounce ideas off of each other. Hey, what did you hear around this? What did you hear around that? What do we need to do as a result of this? So meet with your teams if at all possible. So we've done the prepare side of this thing. Now we're going to get into the analyze side of things. As we do that, I want to just give you a brief overview of the 5 business drivers that we talk about. And just kind of some of the things that we talk about in our class. This will help set you up for the earnings call. If there were several of you who have never attended one of our classes before, and this is really the foundation for most everything that we do: cash, profit, assets, growth, and people. Why these 5 business drivers? Well, 3 of them, as you can see, are tied directly to our financial statements. Cash to our statement of cash flows, profit to our income statement, assets to our balance sheet. Haven't met a CEO yet, or maybe even more importantly, a shareholder who wasn't interested in growth. And of course, it takes people to make it all happen. So somebody fill in, just quick review, somebody fill in the blank for me. Cash is what? Those of you who have been to our classes, you probably know the answer to this question. Those of you who haven't been to our class probably know the answer to this question. Yeah, cash is king. Yeah, it's nice to have a cash cow, right, Cindy? Yeah, but cash is king. We have got to have cash as an organization. Cash flow is king, exactly. We've got to have cash flow as well. We talk about cash flow, we talk about cash position in our classes. The difference of those two, typically mature companies focus more on cash flow, but at the same time, even mature companies will focus on cash position at times. Maybe when they're making an acquisition. COVID, everybody focused on cash position. 2008, when the economic crisis happened, banks weren't lending money anymore. So in 2020, people were scared to death the banks weren't going to lend money anymore. And so they started cashing in all their credit lines so they'd have extra cash available just in case. We also talk about different ways that companies use cash. We talk about the 3 sources of cash: cash from operating activities, which is cash flows. We talk about cash from investing activities and cash from financing activities. So lots of different things that we talk about as it relates to uses of cash, sources and uses of cash. Now, let me just ask a quick question. Does anybody remember and I'm going to forgive you if you don't, but does anybody remember the 6 levers that impact cash? That's a lot. 6 levers that impact cash. I'll give you just a couple of seconds to type something in the chat box. Otherwise, I'll give you a quick reminder there. I think if I got you started, there you go. Thanks, Mike. Accounts receivable. Absolutely. There you go. Increasing revenue, reducing expenses, accounts payable. That's exactly right. So accounts receivable, we want to collect on our invoices quicker. Accounts payable, we want to pay our vendors slower as a general rule. Don't want to upset the relationship with those vendors. By the way, when you get the invoice from Acumen Learning, we'd appreciate if you'd send it as soon as you get it. No, just joking. Can't preach that stuff and then ask for you to do something else. Working capital is a part of cash, certainly, but it is not necessarily one of the 6 levers that we're talking about. But those working capital is impacted by accounts receivable, accounts payables, and inventory as well. So I give you credit on that one, Scott. Yeah, so I think, yeah, you all got them all. Nice job. Oh, and then capital expenditures. There you go. Or overhead. Of course, we're all overhead too, right, Tom? So that plays into it as well. In terms of profit, we've got 3 basic profit metrics. We've got gross profit, we've got operating income, and we've got net income. I'll add a couple more to that. EBITDA, a lot of companies talk about EBITDA, but not all of them. And then also earnings per share. So basic, we had 6 levers for cash and profit. It's basically 2. We can increase sales, and we can either sell more, which Salesforce did this year, or we can increase prices, or we can reduce expenses. They did a lot of that too this year, so that would impact profit. Assets. In our classes, we talk about balancing out asset strength versus asset utilization. Okay. And companies have lots of different assets. A lot of companies have a lot of assets. Not everybody does. Of course, growth, we talk about organic growth and inorganic growth. Let me ask you all real quick. Organic growth, of course, comes from within. Inorganic growth comes from mergers and acquisitions. If you become CEO tomorrow of your company, which one of those are you going to focus on? Organic or inorganic? It depends is the best answer for any complex financial question that you might ever get. That's right. A couple of others are saying organic. A couple are saying both. Inorganic is faster. Yeah, we tend to think about organic as slower but cheaper. Inorganic as faster but cost us more too. Exactly. And then people, of course, make it all happen. Primarily, we're talking about employees and customers are the people that get the primary attention. But there's a lot of other people that have an impact on a company as well. All right, we're going to get started. Yeah, Kelvin's been talking long enough about the review and getting us set up here. The first thing we're going to do as part of this exercise or this process is what we call an executive alignment activity. Here's where we want to know what the executives think about these 5 business drivers. You can see here cash, profit, assets, growth, and people. And then in this workbook, we've got definitions for these 5 drivers. You can see here cash position is the balance in a company's bank accounts, cash on hand, cash equivalents, certificates of deposit, et cetera, et cetera. Now, more importantly, I think, is examples of cash. So when we read company or executive communication, whether it be the letter to the shareholders or the transcript from the earnings call, we want to identify where they talk about cash and all the other drivers, but they may not mention those specific words. So you can see here some other examples. Sources and uses, dividends or distributions is a good example of cash. Stock buybacks, we use cash to do stock buybacks. Debt, issuing stock. Capital expenditures, divesting of assets, mergers and acquisitions, a number of different things that would play into cash. Somebody mentioned working capital just a second ago. That certainly plays into it as well. And then we've got other examples for profit, assets, growth, and people. And then 4 questions we want to answer. So we want to find out how many times they mention each one of these drivers, and then which drivers seem to get the most attention and why. Question number 1. So that we can just narrow that down. And you'll see I did the heavy lifting for you on this one. I'm going to ask you all to help participate next time. What are the 2 or 3 main points the executives were trying to make? Okay, 2 or 3 main points. What are the goals, trends, and objectives going forward? What key questions or concerns were raised by the analyst community? This is one of my favorite parts right here. I'm kind of curious what those analysts want to know. And why are they asking those questions? And what are the themes, the common themes that kind of come out of those questions? So we're gonna start off on our executive alignment activity of giving you a couple of different statements here. So I want you to help me out. Let's just read this first part of Marc Benioff's. We've got 2 sentences here. We're going to work on this first sentence first. I want you to help me identify which one of these drivers he is talking about. Okay, we've just had an incredible year at Salesforce with strong performance across all of our key metrics: revenue, margin, earnings per share, cash flow, and of course our CRPO, continuing revenue performance obligations. Yes, talking a little bit about cash, right? Certainly cash flow. He's talking about profit, revenue, margin, EPS, all of that talks about profit. John, that's a great point. He implies growth, right? He never says growth, but certainly we had an incredible year at Salesforce with strong performance across all these metrics. So yeah, that sounds like growth to me. So growth, cash, and profit just in that one sentence. Now, it's been an incredible year of transformation. Thank you to all of our shareholders, and thank you to all of our stakeholders. Which driver is he talking about there? That's an easy one, isn't it? Yeah. People all across the board, shareholders and stakeholders, all about people. Now, a couple more statements for us here. We closed out fiscal 24. Now, their year ends at the end of January 2024. So there's really only 1 month in their fiscal year 24. So they call it fiscal 24, even though there's only 1 month. My friends from Nissan are on the line too. Their year ends March 31st of every year, but they count it for them. They ended because most of the year was in 2023. They call it fiscal year 2023. So different ways that people do that. We closed out fiscal 24 with $9.3 billion in revenue, up 11% year over year. Our deals greater than $10 million, they grew nearly 80% year over year in fiscal 24. So that's a phenomenal statement there. Deals greater than $10 million grew nearly 80% year over year. Which driver is he talking about there? Growth, definitely. Yep. Our revenue was up last year. Deals greater than $10 million were up last year, nearly 80%. Got some profit in there as well. Yeah, whenever you see the word revenue, think about profit on that, because we just said from a profit standpoint, increasing revenue impacts our profit and our cash. But a lot of times we'll see that related more to profit than to cash. Let's see here. Then just look at where we are now. Salesforce is the world's #1 AI CRM, artificial intelligence CRM. #1 in sales, #1 in service, #1 in marketing, #1 in data cloud. And since the start of the pandemic, we doubled the size of the company. That's amazing. And it is amazing. What drivers do you think he's talking about here? Growth, absolutely. Absolutely. Sales, again, goes back toward profit. Service, I think of people there. And I would even suggest that data cloud might be assets. There you go. Yeah, somebody said assets. Thank you. Okay. Yeah, so you all are catching on great. Now, this is Amy Weaver. She is the president and CFO of Salesforce. She says a couple of things as well. Matter of fact, I'm just going to go ahead and lead the witness for you on this one just a little bit. She talks a lot about cash here. What I want you to do is see what other drivers that she talks about, because she does. Now, to capital return, which that could be cash or assets. We are deeply committed to driving free cash flow. Now, free cash flow is cash flow minus CapEx or capital expenditures. CapEx is typically going to be property, plant, and equipment. So we subtract CapEx from cash flow, and that gives us our free cash flow. It kind of helps us know when we invest a lot into our capital expenditures, what do we have left to be able to do the things we need to do, want to do, and have to do. Pay dividends, pay down debt, buy back shares, pay our employees, any number of things that we might need to do there. So driving free cash flow and return to our shareholders while investing in new organic growth initiatives. In fiscal 24, we did $7.7 billion in share buybacks, or more than 80% of fiscal year free cash flow. Additionally, the board has approved a $10 billion increase to our share repurchase plan, bringing total authorization to $30 billion. Let's see here. So she talked a little bit. New organic growth initiatives, technology could be definitely for Salesforce could be part of that. Cash growth assets, cash people growth, people cash growth assets. Yeah, exactly. Does share buyback classify as assets? That's a great question. We spend cash to buy shares back. Now, we're buying those from shareholders, okay? And when we buy those shares back, we actually retire those shares. And so that actually goes in as a negative to our equity rather than our assets. So we sold those shares initially, and we got the cash for that, which would be an asset. A lot of those shares, we spent that cash a lot since we actually got that cash. So it would be considered cash when we first sell those stocks, but when we buy them back, they actually go into the equity section. Yeah, Kathy makes a great point. When we buy back shares and retire those shares, that helps us increase our earnings per share. It also helps us if we're paying dividends to increase dividends more often because we're paying out on fewer shares of stock. So hopefully, if you have more questions about that, let me know. I'll be happy to go into more detail there. All right, let's see here. Oh, one last statement here, and this is, I mentioned earlier, there's one thing that they said in the earnings call that would get the shareholders excited. Amy also announced that, of course, Mark had also said it too, but incredibly excited to announce our first ever dividend. 40 cents per quarter is going to start this particular year. So if you are a shareholder in Salesforce, you ought to be pretty excited about that. All right. Now, here is the results that I got as a result of reading the, was that question, why is that related to the dividend, King Lee? Yeah, why did they decide to pay dividends now? It's been 25 years. They didn't necessarily say why, other than their cash flows and their future earnings opportunities are looking like they are at a point now where they chose to pay a dividend at this particular point. Typically, companies will pay a dividend to reward their shareholders. After 25 years, it's probably a pretty good time to start rewarding some of those shareholders. Great question. So here's the numbers that I found. So I've got the executives' comments over here on the left and the analyst questions and the responses from the executives over here on the right. And then the total over here on the far right for how many times I saw each one of these drivers. Part of mine is kind of covered up under here for cash, but I can tell you that we got a total of only about 29 mentions of cash, which is a lot, by the way, but it was all in good ways. Usually when the analyst will not ask a whole lot of questions about cash if there's really no reason to be concerned about cash. So this was all good mentions about cash. But you can see here pretty close numbers in terms of profit, assets, growth, and people. I mean, we could almost call this a four-way tie on this, but I focused on profit since it was the number one, growth was number three, and then we'll see some mentions of assets and people as well as we go through this. So what were which business drivers seemed to get the most attention and why? Here's what I came up with: profit and growth. Now, a lot of times I like to separate these two drivers out and just talk about what was mentioned about each one. But there's such a tie here between both of these drivers that I thought I would mention everything related to both. So strong performance across all key metrics. We've already kind of heard about this. Incredible margin growth. As Marc said, well, margin growth that I've never seen in any software company over the last 12 to 18 months. So he was pretty impressed by this margin growth. A lot of that was related to operating margin in particular. Our deals greater than 10 million grew nearly 80% year over year. For the full year, we delivered almost $35 billion in revenue, up 11% year over year. Now, remember, revenue we consider as part of profit, helping drive profit. Continued disciplined approach to margin expansion, okay? Profit, growth, margin, expansion. Non-GAAP operating margin was 30.5%, up 800 basis points year over year, and we're committing to 32% operating margin next year, okay? Some people don't always know what basis points are. 800 basis points is basically the same as 8 percentage points. Okay, 100 basis points would be 1 percentage point. 800 basis points equals 8 percentage points. So he's saying that we were basically at 22.5% for non-GAAP operating margin last year. Quite the increase there. Expect free cash flow to grow between 23 to 26% in fiscal 25. Our guidance on revenue is $38 billion. Up 9%. Yeah, GAAP is generally accepted accounting procedures. So typically, EBITDA is probably one of the more famous non-GAAP margins that we think about. And so this was a non-GAAP margin, not the GAAP margin. Our guidance on revenue, $30 billion, up 9%. Data Cloud, one of the assets for Salesforce, has strong momentum. It's approaching $400 million in annual recurring revenue and growing nearly 90% year over year. CEOs are all focused on fueling growth and strengthening customer relationships, and they see artificial intelligence as the tool to augment their people and drive more productivity. A lot of talk about artificial intelligence, a lot of talk about Data Cloud in this. Closed 86,000 multi-cloud deals last year. That may mean a lot more to you than some, but 86,000 multi-cloud deals sounds like a big deal. Salesforce added 3,000 new logos, new customers through Salesforce Starter, a solution for small businesses. That's fantastic. I would love to see 3,000 new logos in any company. What were the sorry, I've got part of this that's not showing up. What were the 2 or 3 main points the executive was trying to make? Sorry, part of my top is covered up there. Excited about the transformation for Salesforce and excited about the transformation for the industry. So that was one of the headlines there. Next generation of AI, and they talked about how, in a year, a lot of this AI could be obsolete. We've got new AI out there. Data Cloud, fastest, most exciting ever, new product ever, fastest growing, most customer traction. Strengthen relationship with the investors. Thanks to Amy Weaver, gave her a lot of kudos on that. Management team and the board of directors. And certainly providing that dividend would help strengthen that relationship as well. Also buying back a lot of shares. Transformation has driven incredible results. Productivity is up, profitability is up, margin is up, revenue is up, and you're going to see it again in our results for our quarter. He was talking about the quarter when he's giving this presentation, which was Q1 for this year. First ever dividend at 40 cents. CRPO, current remaining performance obligation, $57 billion at the end of the year. So they basically got orders they still need to fill at $57 billion. Principles. Yeah. Sorry. Did I say practices? Principles. Yes. Generally accepted accounting principles. Largest enterprise applications company in the world, and passed SAP. And then secondly, just Marc Benioff's excitement. Never been more excited. He says, and you know, if I'm Marc Benioff and I own probably 3% of the shares at Salesforce, one of the things I'm excited about is the growth in the stock and a new dividend. But he started off with, and I love this, he started off with customers. Our customers, CEOs want more productivity, higher value customer relationships, and higher margins. Okay. He's talked to a lot of CEOs. He's learned what they want. Salesforce was going to give it to them through next-gen products, through AI. 3 essential components that their customers need: compelling user interfaces that deliver insights and intelligence across sales and service. Some of the other brand names that you may be familiar with as well that are owned by Salesforce: Slack, Tableau, MuleSoft, and several others as well. World-class AI model, have to be able to use these AI models. And he kept talking about the gold is in the data and the metadata. And Salesforce is one of the largest repositories of enterprise data and metadata in the world for our customers. It's all about the data and, of course, AI, and they feel like they have unlocked the secrets to that. What are the goals, trends, and objectives going forward? Artificial intelligence, the Einstein 1 platform, including Data Cloud and Copilot, are rapidly infusing conversational AI across product portfolio. Einstein 1 is a huge differentiator in the industry. And then finally, guidance. Gave a lot of detail about guidance, more so than what a lot of companies do. Revenue up 8 to 9% growth in the now current fiscal year. And that includes some headwinds from foreign currency exchange and their professional services side of the business. Attrition slightly above 8%. Margins, non-GAAP operating margin of 32.5% now. So 200 basis points up year over year. And still, even with that 200 basis points up, still planning to make some investments in growth opportunities. Of course, their core business related to that. Again, margin gap is expected to surpass GAAP even. We got non-GAAP here. GAAP margin is expected to surpass 20%, up 600 basis points. Again, tremendous improvements. Operating cash flow up 21 to 24%. Just growing like crazy. CapEx slightly below 2% of revenue. I see this number anywhere from 0 to probably 5%. It can go higher than that in a lot of different companies, but that's probably a pretty good range. And then free cash flow up 23 to 26%. Good question. A lot of companies actually report GAAP and non-GAAP numbers. The way I explain a lot of this is from a home ownership perspective. My wife and I talk about how much cash we have all the time, how much cash we have or don't have. And as I like to say, I can kind of look out in my backyard right now. We would have more cash this last year if we hadn't put a fence up around our backyard and if we hadn't done a lot of landscaping in our backyard. So our cash is this, but our adjusted cash, if we hadn't done all that stuff, would have been X. Okay. And kind of the same way in terms of profit numbers. CapEx is also referred to as capital expenditures. Typically that leans toward property, buildings, land, plant, manufacturing, and equipment. So that could be buildings, it could be equipment, it could be vehicles, it could be jets, planes, At Salesforce, it's largely related to technology. How do you interpret for company letting go of employees to reduce expense? That's a great question. And we do a little exercise in our classes. We call it the 100 up and 100 down exercise. And basically, the question is which has a greater impact on the bottom line, net income? Is it by increasing sales by $100 million, or is it decreasing expenses by $100 million? From Axel, he says to everyone, it's the latter. It is. It always, I've never seen it come out increasing sales by $100 million over reducing expenses. Not a fun thing to do, to let people go, right? But sometimes if we're not, and that happened with Salesforce. There's been a couple of years in a row where there was some restructuring going on. But if we're not meeting projections, we have to make some tough decisions at times. And sometimes that includes people. And I've been the one that's been let go, and I've been the one who had to let others go. And I can tell you, not a fun situation either way. Let's see, did I get through here? Yeah. So thanks for the questions. I appreciate those. What are some of the key questions or concerns that were raised by the analyst community? I'm not going to go through these, but I did just kind of come up with a list of kind of the themes that were talked about. I'll go ahead and kind of highlight some of these on the screen here. But a lot of questions about customers. You can see what are you seeing from customer behavior? How are customers ingesting this? How are customers purchasing the Einstein platform? Does it start with Data Cloud and then move into more? There was a couple of questions I really loved on here. By the way, customers, investors, margin, it talked about guidance for this fiscal year. Using your own product was talked about a couple of different times. AI was certainly mentioned, and then pricing, which kind of plays into profitability as well. But a couple of questions I really enjoyed. Let's see here. On guidance, you're adding another 200 basis points of operating margin. Where is this coming from? And it was really part of that included, going back to your question, Son, is we had smart headcount management. And certainly investing in some of the right things to help reduce some of those expenses as well. Let's see here. I like this question here on number 10. Gross margin and sales efficiency are quite strong this quarter. I'm curious from a standpoint of eating your own dog food or drinking your own champagne. Have you been able to realize any benefit from deploying either Service GPT or Sales GPT internally to save time for your own teams? Love the wording of that. And yes, they do use their own product and have seen some improvements in that. The other one was on page number 8, pricing and bundling around Einstein 1. When will that move the needle for revenues, and how much of that uplift are you baking into the guide for this year? So love the language around those questions. Basically, the answer to that question is very little, if any, was actually built into the guidance for revenue for this particular year. So lots of different ideas. Customer certainly revolves around people, investors, people, margin around profit, guidance around cash, profit, and growth in many ways. Using your own product, assets, and people. By the way, our CEO is fantastic about the people driver. I would say that's probably one of our primary drivers, and you can tell that he always thinks about the employees and the customers when having to make some decisions about people. So really respect and appreciate him using his own product as well. All right, let me share with you this. This is a tool that we call Navigating the Financials Worksheet. You'll notice over here on the left-hand side, cash, profit, assets, and growth. So we've got 2 metrics associated with cash, 3 associated with profit, 2 associated with assets, and 3 associated with growth. Now, what I've tried to do here is give you the key metric and the line item that you might be looking for. As an example, net profit margin. Well, there's two line items that we need to find on our financial statements to get that number. It's net income and it's total revenue. So over here, we can tell where we can find those numbers, which statement it's on by the dots represented here. You can see it's either going to be in the income statement, the balance sheet, or the statement of cash flows. We can find these on the income statement. Over here is the results. By the way, you can see how to calculate this particular metric over here, and we give you a place to put your numbers right here. All right, so cash and cash equivalents. On the balance sheet, let's take a look at our balance sheet here at so January 31st, 2024. We've got $8.4 billion in cash and cash equivalents compared to $7 billion last year. So we're going to put that number right here, $8.4 billion. Those numbers are in millions, so we've got to add 6 zeros to those numbers. Cash from operations. Let's take a look at the cash flow statement and find out how much we had in cash from operations. Well, again, we find this in the cash flow statement. And the first section here is operating activities. So we're going to go down to the bottom of that. Net cash provided by operating activities, $10 billion, a little over $10 billion. So we're going to put that in there. Next line item we want to find is total revenue. Income statement again. So our total revenues. Now you got to be careful here. Salesforce actually generates revenue in two different ways. So you want to make sure you get the total, and that's $34.8 billion. So we'll put that there. Now net income, same statement. And we'll go down here to net income, $4 billion, a little over $4 billion, $4,136 million. Now you can see I've gone ahead and filled out the rest of this sheet for Salesforce for fiscal year 24. We had about an 11.9% net profit margin. So that's our net income divided by our total revenue. Our equity ratio, pretty high, quite honestly. Don't see many companies that high in equity ratio at almost 60%. Our return on assets, 4.1%. We've got a lot of assets at Salesforce, almost $100 billion in assets, and only about $4 billion in net income. In terms of growth, our revenue grew 11.2%. Our net income growth, yes, this number is correct, 1,888% growth over last year. We'll get to that here in just a second. Yeah, exactly. It's a bigger wow than it probably should be. We had some large expenses last year that played into that just a little bit. Matter of fact, I probably need to pull that up because I need to explain that soon. So now here's our comparison to in 1900 in terms of earnings per share growth. So just comparing to last year, cash up a little bit. Cash flow up a little bit, total revenue up about $3.5 billion, net income up, so $208 million in net income last year. Now, we actually did pretty good. Sales actually went up about 18%. However, we had some extra expenses. We had some restructuring expenses, $828 million. We were down about $1.4 billion in terms of some strategic investments. And then our taxes were about $364 million less than last year. So altogether, along with some other marketing and sales extra dollars spent, that was about a $4.4 billion extra that we had in 2023 compared to 2022. All right, I gotta move on. Sorry about that. So net profit margin, whenever you got low net income, that's gonna certainly drive our net profit margin down, our return on assets down, equity stayed about the same. And you can see compared to fiscal year 22, we didn't do so well compared there, but it was really some extraordinary expenses, I would suggest, related to that. And now we could also compare this to quarter by quarter. You can see, again, pretty good growth in Q4, especially compared to the year before. We could also compare this. Let's see here. Who is this? Oracle. Oracle. Since he went to work for Oracle and Larry Ellison, thought we'd compare these two. So Salesforce is a little below in terms of cash, a little more below in terms of cash flow. Oracle's got about 15 billion on them in total revenues. Profit margins 17% versus 12%, pretty close there. Interesting that Oracle has only about 1.2% equity versus almost 60% equity here. Different philosophies apparently in terms of how they manage debt versus equity. Return on assets slightly better. You can see our growth rates at Salesforce were considerably higher. May not be a fair comparison. Pretty strong growth rates at Oracle that year as well. This is SAP. Similar numbers in terms of cash, more for Salesforce and cash flow. Similar numbers in terms of revenue, but as Marc mentioned, went ahead of SAP this year. Still, SAP had some pretty good profit margins, similar equity ratios, and then pretty good growth numbers here as well, but not quite as good as what Salesforce was. All right, so we've analyzed now. Now we need to apply. Anybody ever hear this from your mom? To know and not to do is not to know. We might as well have never known it if we're not going to do. So as I mentioned early on, we need to apply this to our job and how do we align with the executives. So, whoops, sorry about that. So new insights. Love the excitement of the management team. Knowledge is power, but we must apply our knowledge. There you go. I love it, Kathy. Thank you. Love the excitement of the management team, especially Marc Benioff, even after 25 years. I mean, he sounded like it was a brand new company for him, and they've already taken off. Impressive results in fiscal year 24, relating to a lot of different things. Going to start paying dividends to shareholders for the first time. May want to go buy. Well, I can't say that. I own some Salesforce stock. I can't recommend that you buy it, but it might not be a bad idea. No, I'm joking. I'm joking. Amazing transformation. Looking forward to watching future results with their use of artificial intelligence and the Einstein 1 platform. Thousands of AI models right now, but there are tens of thousands, if not hundreds of thousands of models coming. All models available today will be obsolete in a year. So it's going to be interesting to see what happens, but it certainly looks like they're sitting in a good place right now from a Salesforce perspective. Based on what I've learned, what are 3 actions I'm going to take? I'm going to continue watching the transformation of Salesforce, probably pay a little bit more attention to it, continue using this tool and process to follow the financial success of Salesforce and others as well. And I need to learn a little bit more about AI. Certainly lots of stuff coming out about AI, and I need to be in on that bandwagon a little bit more than what I am right now. So I highly recommend that you use this tool and this process to review any particular companies. Maybe you're going to review your own company using this tool. Maybe it's a customer or a partner, or maybe a competitor or another benchmark company. So now everybody help me out on this one. 3 things to do before the call. Locate the call or transcript. Number 3 is meet with your team. What's number 2? Anybody remember that? Prepare, but even a little bit more than that, Kathy. Notes from the past call, exactly. Review your notes from the past call. So the more you do this, the more notes you're going to have. What's fun is when you hear analysts ask questions on the calls, and you know the answer to the question because you've listened to every earnings call that your company has had. So there is some repetition. Notes from past call, look up the transcript and prepared remarks. Exactly. Let me. So who are you gonna analyze? By the way, here's just some information that we've gathered from companies that we have worked with. All right. Some of the results that they got out of taking our classes: 84% improved the performance of their business or function. 81% increased collaboration with others in the company. 77% improved upward communications. That's important. When you've got business acumen and you can improve your upward communications, again, that goes back to improving your career. 77% improved employee engagement, 75% increased business focus, and 84% improved teamwork. So a lot of different things that companies, people get out of our classes. Thanks for joining us today. Our next class is going to be on, or excuse me, our next webinar is going to be on May the 23rd. I kind of went past it a little quick right here. We're going to be focusing on Mondelez in the next earnings call lab. So if you're interested in Mondelez or just want to hear more about this process and this tool, we'd love to have you join us again. Thank you all. I'm going to stay on the line as long as you may have any questions, or I love just seeing the notes coming through as we end here today. We got pretty quick. Thanks for all the questions there. I love that. It helps make for a more engaging class, even when all we can do is ask questions in the chat box. Thank you all. Dwight, look forward to seeing you soon as well. Thank you.